Yo guys, FX, welcome back to another video. We're pretty much about to go advanced with this one. I'm not quite sure how long this one's gonna be, and if it's too long, I'll just be cutting it into minor video segments, just so attention span keeps being proper, But yeah, today we're going advanced with time and price, right? Pretty much gonna be beginning from. Let me remove. This is nice. Okay, let me remove everything. Okay. Then we're gonna go to the hourly time frame. Right now, I'm gonna be showing you how price behaves. Because one thing you need to know, right? Price does not only refer to the previous quarter range. I was just providing this based on segments, right? Price does not only refer to based on the previous quarter range. It also refers back to the previous quarter session. Meaning that, for example, if I'm trading, what can I say? If I'm trading, we can introduce this, right? The indicator. We got this dealing range right here, which is for Tuesday to Wednesday, right? And then we enter Wednesday like this, right? Two things you need to know: the characteristics of price within syncs of sessions, right? Is that they are simply a continuation of its previous session or the same session within a previous day. What do I mean by that? This impulsive move lower, right, reacts based on the previous quarter session, right, which was simply an accumulation range from here to here, right? This is our accumulation, true price accumulation, right? That was Asia. This right here is London manipulation, and it's a manipulation when it closes, meaning that as soon as the third quarter begins, this is when this is verified to be a manipulation, right? And then we can anticipate a distribution lower because price is above the Asia high, right? So when we got that in check, right, one thing you need to know is that this impulsive swing lower, right, will generally react based on confluences that happen within the previous quarter range. Therefore, we are not only looking or using previous session or previous days highs and lows, we are also referring to previous session ranges from the previous day. For example, if you can pay attention, the first one, right, this one is our Asia, right? Heading into the second one, so here, this is our manipulation, right? Right there. Heading into New York, our third quarter. This is our distribution, right? Okay. We even invalidate with this right here, right? So one thing you need to know and understand, right, is that when price is going low right here, what it's simply referring to is its previous session range. It's going higher to tap its previous session range, right? If it's not doing this, it would usually look to tap or become a continuation of the previous session Asia. Meaning that, for example, we can say we got two quarters like this, right? We got two quarters like this, and we're looking to trade New York, right, for bullish price, right? Usually, price would draw back into the previous session Q1, something like this. Sweep its from high to begin to react lower. Does that make sense? This is Q2 from the previous day, and then this would be the current day, right? This is simply how price behaves. And if it's not doing this, it will be simply doing the same components or the same action based on Q3, right? In simple terms, what you're mainly focusing on, right, is the ranges, the highs and lows. Those are like your ideal and defined ranges, right? So when price within this high right here was drawing back, what was it drawing back to? It was drawing back to the Asia range, right? But like now, when you're looking at this while you're within sync with market correlations, right? You can do it like this and then add in our additional pair, which would be Nasdaq or S&P 500, right? If you can pay attention, let me just fix this. This is why it's extremely crucial to be using market correlations, right? When price draws higher, it draws back into the Asia session. I mean the London, the previous day London, right? Within this range right here, right? But now on S&P 500, this is the exact same range, which will be this range right here, right? When it draws back into that range right here, this happens to be our previous day Q3 range, and that's present within this range right here. So we can even refine it like this. So this day was referring to the low of this day right here, and when it does this price range within this area, right, is pretty much not random. It's targeting a specific quarter within this range, right? So we can do it like this. We are simply going to be focusing on this range in which price we X off, right, when we reach here, right? Let's go to my scripts. Then we're going to go to the New York model, right? Let's see if it's the one. Then we can add this one and this one too. Okay, perfect. Okay, you can pay attention, right? When it was referring back into this price range, what was it doing? Referring back into the accumulation of the previous New York range, meaning that this distribution right here is a referral based on the previous quarter range. This is extremely not random, right? Just clean up the chart. This is how it looks. Our distribution begins within the third quadrant of our range, right? I mean, within the second quadrant of our distribution range, meaning that our breaker was initiated within Q2, making Q3 our distribution, and then Q4 our continuation low, right? Same thing here, but price goes higher, sweeps this accumulation high. Same way here, sweeps this accumulation high within our manipulation, and then our distribution goes a bit higher to sweep this high right here. But in this area, it doesn't, right? So if we can come back to this range right here, I'm gonna try using bar replay. Let's see if it's gonna allow us. Just trying to show you the fractalities of this, right? Let's go to a lower time frame. We'll say the 1 minute is fine. The 5 minute is fine, right? Accumulation, manipulation, distribution, right? And this is within the third quadrant range, right? Now, what you want to see within this range, while you are in sync with market correlation, right, is one thing you'll notice: the exact same thing presents itself within this range. right here. Can you see that within Nasdaq, S&P 500, Nasdaq, right? If I can do it like this, I'll say remove all drawings, then we add them. It's the exact same thing, right? Exact same thing, right? But like now, what's going on within this range right here? That's what you want to know, right? Or you want to see. Showing you the price is fractal. We are gonna go back into the range like this, right? We are gonna add in our quarters again. New York Q3 quarter, right? Perfect. Then now we can even go to the 1 minute time frame. Then you tell me what you notice. Then we can add this too on Nasdaq, potentially even US 30 if valid. Okay. By the way, I really got no easier way of explaining this. Hence, this is very, 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 it's a lot of information. I wouldn't say it's confusing, but it doesn't really hide from you once you know what you're looking for, right? So if you can pay attention, the same profile forms. This is S&P 500, this is Nasdaq. Accumulation, manipulation, distribution, and it's both within the price range. So if we go back to Nasdaq, right, we can bring back our indicator. This indicator, guys, just helps me identify the times faster, you know. If you want it, you can hit me up on Twitter. I'll be happy to provide you with it. Okay. But yeah, all this distribution is happening within Q3, right? So the model is pretty much fractal and universal to time. You understand? So what happens here, price distributes lower, right? Let's go back to that range. Price distributes lower, right? And then as soon as we get this accumulation low right here, which price likes referring to, same way when it goes higher like this was our manipulation range of this quarter, right? So you can identify that. Okay, it's not visible. We can just do this like this, right? This manipulation range right there refers back into this quarter right there, especially to the specific pip to say, right? So this is kind of like fractal, but basically what you're looking for is, if you want to trade New York, you want to see if it's reacting based on the previous day, London or New York. Within this case, when you can drag it like this to our current dealing range, right? The chart is very noisy, so we're just gonna start cleaning everything up again, toggling. When we're within this distribution range, right, which is this range right here, right? This was London accumulation, right, or manipulation, because this right here was our New York, our Asia. So we can even go to a higher time frame just to refine price, avoiding noise and stuff. Okay, within this distribution range for New York, what does price do? It initiates a reversal as soon as it hits the Q1 of New York of the previous day, which is this one right here. Then it begins to draw lower, right? And this Q1 is within Q3 of the previous day, meaning that it's within this range of this range right here, right? Draws back to that range, it starts distributing lower. You understand? What is it going for, or what is it targeting? Let's remove the indicators again just to reduce noise, because they can be very, very distracting and hard to learn, right? when we had a price rally like this, right? When price is drawing lower within our distribution, you gotta bear in mind that what it does, it draws back into Monday's range. These are the signatures of price, which is this range right here, which is our accumulation range specifically, right? It draws back into that range, and the one after it, if you can project this to your right, where is it drawing to? Tuesday's manipulation. So this is how price behaves. When price draws lower, goes back into Tuesday's manipulation, then it starts toggling higher, right? In this case, price was above, like this. It went above it, starts reacting off Wednesday's Q3 range, right? This is kind of like why people be using regular trading hours, toggling from regular trading hours to electronic trading hours. But usually like this, when you get the grasp for it, it's kind of like the same, you understand? But now to go into strict detail with how this works and how I would apply it for specific sessions, right? For London needs to sweep Asia high, right? And that is present within all of this days right here, right? Let's go to the 5-minute time frame. Then let's see. No, this is the wrong one. It's this one. Okay, perfect. This range right here is London accumulation. Let's even increase the text to make it easier for the eye to see, right? Price sweeps London range high, right? It draws lower. That's practically or simply enough for you to take a trade short, right? Same way right here. Price accumulates, meaning that accumulation 1 swept London high, right? It goes higher, distributes within our third distribution range, right? Same way here. This is entirely New York, right? What does price do? Sweeps the Asia low within Q2. It begins our distribution higher, goes back into the range, specifically to this inversion fair value gap right there, and the order block, which is a fixed balance price range. This range right here. All right, so this range right here, price draws back into it, then it starts pushing higher, right? So you wouldn't see that if you did not have these annotations or not expecting price, right? But now, here's the thing. For price to have toggled higher within this range, right? What was it reacting off within that range right there? We'll do this. We can go back into the 1 hour time frame. Now we're just squeezing in weekly profiles, right? Okay. This range from here, let's use our Gen box. From this range from here to Thursday, 6 p.m., right? This is our 4-quarter range, right? Our dealing range for the days, right? So when price is drawing low within this range right here, it was looking to sweep sell side, right? Now, if you can pay attention, where does it do that? It's doing that within New York. This becomes a New York distribution, right? And now this high that it formed, this specific low that it was targeting, is specific to time, right? This was the beginning of midnight open, meaning that this was a continuation of the previous day Asia range, right? So this swept that range and began to move higher, and in confirmation it was below the current day accumulation range, meaning that it sweeps, it's referring to two dealing ranges, two session ranges, Mondays London and Tuesdays London. It goes above both PDRAs and starts moving higher, but it's enough for you to identify one. One is perfect, right? Now, when price is drawing lower right here, right, we can even extend this like this, right? What does it do? It sweeps Tuesday's high, right? Begins to distribute lower, right? Bearing in mind, if we divide this, where is it reacting? It's reacting within the distribution range, which is New York. That's why they say New York will generally be generally in simple terms, New York is the session with the most volume, more often than not, especially for features and US correlated pairs, right? Within Q3, it drops, right? Same way within this range right here, when it's referring back to Q3 to draw lower, right? What is it targeting? It's going back into London, into the Q2's low, which is our accumulation range. This is how price behaves. It reacts. London, in simple terms, let me do it like this. The third quarter will refer back to the highs and lows of the previous quarter. If it's not doing that, it's going to refer back to the highs and lows of its previous raid session quarter or its previous phase quarter, meaning that let's see. Okay, I don't know what just happened. When this range is drawing lower like this, it was using this session raid, which is the previous day New York, to support lower prices, right? Specifically time and price. It's going to be referring to PDRAs that are within the same approximate time and price, which is the 90-minute cycles, right? Usually PDRAs within the 90-minute time frame from, for example, 12 o'clock, 3 a.m., 7:30, 1:30. Those are like usually the high resistance or the time scales in which price is most likely going to react off. You understand? So in simple terms, price is just hovering from high to low. It's reacting based on its previous quarter session, high and low, right? And what supports this range as a distribution lower, it's also because it's above Monday's high range, right? So Tuesday sweeps Monday's buy side. See, it reacts lower for the PM, goes back higher. It sweeps Q2's high, draws lower within New York, right? Goes back into the range. It revisits the previous day in New York to draw lower back into the range, right? Now we're within Friday. Fridays are usually the trickiest to be trading. So with this ones, you want to be referring to internal session ranges, whereby now, if you are to be trading within London, right? London, which is currently what we have right now, right? You want to be referring to the previous session quarter ranges. What do I mean by that? We can include this indicator right here. This is what we're looking for, right? With confluences that are within other asset classes, right? Whereby now on NASDAQ, we got this accumulation sweeps sell side of Asia in the quarter one. This is our SMT divergence. This indicates high probability reversals, right? But now when price was drawing lower right here, specifically, it's referring back into this inefficiency range, right? But now what is this range? It's Q2. of the PM session. Just right here. We'll make this green. Like this. This is how price behaves. When it's going lower, it's going back to this Q2 range, meaning that it's reacting, using this as support for higher prices. And it distributes just like that, right? So I'm trying to make this video very, very short. I'll be going into more details and more refinements on how I can explain this. You're probably going to have to watch this video 1,000 times just to properly understand it. But if you're struggling, then you can just hit me up on Twitter, or you can hit me up on the comment section, and then I'll be sure to assist. And if you want these indicators, just hit me up on Twitter. I'll provide you them, because they just make things easier, It's different versions for different sessions and stuff like that. So yeah, hopefully everybody understood this, and hope everybody stays safe. Yeah.